Alright, guys, TNX on the Toronto Stock Exchange. Thank you, screener.nextbigtrade.com. Alright, I picked this one up because this is potentially a breakout that had a pullback and that we're really close. If we're refining the buying process, we're getting really close that this might be a time just to pick it up as it bounces back off the breakout line. So imagine that was part of one of my theories, or what I think was interesting. You have the breakout candle. You know that has good probabilities of pulling back, especially on stage 2s. On stage 4s, when it breaks down, then there's just fear and panic and the whole shebang, and maybe it doesn't pull back up according to Stan as often as it would on a stage 2 breakout. So I said, okay, let's wait for a stage 2 breakout. Let's wait for that first pullback within 1 to 3 months. And if it's on contracting volume, it actually confirms that stage 2 is healthy. And then you get to buy on that, on the bounce of the breakout line, of the pullback on contracting volume. So here we are. This is a good example for it. You could see it a little bit on the monthly. Let's zoom in. There we go. Let's start setting alerts. Hello. You get a new ticker. Start putting alerts, defining monthly resistance, support, and there's Stan Weinstein. I do on the weekly, but I still have my classic chart trading framework, which I use to confirm the trend on the higher prevailing trend on the monthly. And that's how I usually set it up, guys. You see that target runs right through this resistance. So the more probable target would be this. So who knows what's going to happen here? Eventually, maybe we're going to have a pattern, and I'll have a smaller pattern, smaller target, closer target to the breakout line, bring me up to here, to 670 instead of 320, 317, which I call, this is the greedy target, that further away target there. But you have to respect that potential resistance right here, where you might go in and maybe not reach that target over there, and then the price action gets sucked back in within that, and then you'll just end up having just a wick, and here's the body of the candle. So that's called target considerations. I have a whole bunch of examples, badcharts.com, go check that out, or in my how-to target considerations. And I have a whole bunch of old blog entries with print screens and descriptions how I do that. Anywho, so here we are, okay, on the monthly, and we're gonna zoom in on the weekly, because right here, if I would have done this podcast a few months back, we get some. I could have probably seen a base right here, then breakout line right there, and this could be the pullback right here. Maybe a little higher on the weekly, maybe like this. This is the monthly defined, and on the weekly it's probably a little higher. Let's go check it out. Check it out, TNX. Look at the breakout. It's so easy when you have the volume candles, guys. It's so telling. Those crazy Marabuzu candles there. The breakout candles. Right here was trying back here. Kind of broke out. Price action got sucked back in. You could see the volume. Still sloping down 30-week moving average. Under the red cloud, the Ichimoku defined resistance. So it's starting. It's like once it get out of its shell, just needs a few more cracks. So burst, pull back, see that volume contracting. Oh, look at that, so nice, super duper low volume. Needs a little more time to marinate. And look at this candle right here. Right here. No breakout candle right there. still bursting out of the cloud a few weeks later. Strong volume, pull back, less volume, explosion, strong volume. See that you're starting to get it? Above another weekly defined resistance right there. Burst, and then we go. So let's say there's a breakout candle is right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Hey, what's that, man? Oh, no. Ah. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. So within 1 to 3 months, you usually have a pullback. And look at that, brought you all the way back down to the breakout line. Now we have a green. So we have to wait. Red, 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 red. If we get a green candle here, if we close the week, green candle. See that volume? Minuscule, very healthy. You could get a nice green candle right here. Bounce off the breakout line that we had all the way back here, guys. It's like you saved all that time, all these emotional landmines on the way down. This stock sucks. You see your NAV go down. I hate this. I'm no good, not a good trader, whatever. All these things that might go through your head here. But right now, this could be when you give up and you just say, okay, I'm giving up, getting out of the stock, going to something else. And that's when it bounces up. See, red cloud, Ichimoku cloud, you're above it. You're on the 30-week average, good place to bounce. You're on the breakout line, good place to bounce. And you have the health of the pullback telling you that this is a healthy pullback and not a reversal yet. Good entry, guys. I think this is pretty good. Let's wait for the end of the week. See if we get that green candle. If you get that green candle, then you could give it a go. Put your sell stop below the takeoff pattern down here. Enter wherever that candle tells you here. That's your risk. Don't lose more than 1% of your NAV here. Worst case. And after that, expect this to go back up. Even the RSI starting to wind down. Probably give it a boost of the halfway point going back upwards. So that's pretty much how I deconstruct the DNX, how to refine the buying process on pullbacks. And this is how it's getting mature, how you can get ahead of the curve just by waiting this week out and seeing what happens. If it completely fails and goes down, then you forget about it. But right now, this would be a place to add on a pullback. All right, guys. TNX, man. I'm keeping that chart open. See you Friday. Ciao.